Continuing with the investment banking process, we have selling procedures. So the um, on any issue like say a stock issue or so forth of any size, there will be an underwriting syndicate. So it's a group of investment firms. It's designed to spread the risk associated with the distribution of this new issue. There are also large bond issues also use underwriting syndicates as well. The lead or managing underwriter the is the investment banker that oversees the underwriting syndicate. He manages the distribution and sale of the new security offering, and as a result, they tend to make the vast majority of the profits. They are also taking the most risk, so it's a risk reward type situation. They are also referred to as the book running manager. Uh, so selling group is below the syndicate or underwriting syndicate. Those are network or brokerage firms that will assist with the distribution of the new issuance. To be truthful, the selling group pretty much kind of cleans up the scraps, whatever's not sold when the other members of the syndicate are through. Uh, they Next is shelf registration. The securities registered with the SEC um, for sale at a later date. This is SEC Rule 415. It allows for securities to be shelf registered and sold up to 2 years later. So it's a fairly simple process. It just requires, I believe, a day's notice to the SEC, something, I believe that's the way it works. But anyway, they're held on the shelf until the sale. Uh, um, the investment banker, especially the lead manager, is required to maintain a secondary market. This is true for new issuance and especially for IPO issuance. The investment banker is obligated to maintain a market for the shares of the stock. It means that they will buy and sell that stock. They and to ensure an orderly market. So the lead underwriter agrees to do so to make a market in the stock, keep it reasonably liquid. They provide liquidity to the investors. So, um, other types of financial intermediaries: commercial banks, credit unions. The commercial banks and credit unions are quite similar. Um, the um, the credit unions are uh, a not-for-profit entity that is created for the purpose of conducting banking activities. But one thing, don't necessarily let this fool you. There are credit unions that I would say are honorable, and they tend to be those that are associated with various organizations, some organization that you may belong to, so forth. Um, they, I would, I'm not saying they're unscrupulous, but if I was going to do business with a credit union that uh, was not a part of some organization I was associated with, I would investigate them carefully before I conducted business with them. Savings and loan associations, there are thrift institutions, S&Ls. They were also referred to. They were much more prominent 30 years ago. There was actually an savings and loan crisis where Many savings and loans went bankrupt. At one time, they were the primary lender for mortgages in this country. That has completely changed, and savings and loans play a very small role. Mutual funds, mutual fund companies, they take take money from investors and they create funds. They You can buy a mutual fund that will invest in just about anything that you can imagine. Um, Whole life insurance company provide cash value life insurance. Pension funds manage funds on behalf of their participants. The role of financial intermediaries is next. So role is to facilitate the transfer of those funds from savers to borrowers. They create a wide variety of products. Obviously, from the companies on the previous page, you can kind of visualize the number of products that are available through those types of firms. Um, so what benefits they provide? Number one is reduce costs. They mitigate risk through diversification. They provide funds divisibility, pooling of funds, financial flexibility. The related services. As far as if you think of a company that makes a loan. So to you, whether that be a car loan or a mortgage or any other type of loan, the they typically, for example, use standard documentation, the company's loan documents, and for a mortgage, for example, if you were to enter into a mortgage and have to create those documents on your own, there would be thousands of dollars in costs in for paying lawyers, for example, to produce those documents and edit them and make sure they're accurate and so forth. So that's an example of the reduced costs that financial intermediaries provide. Um, the international financial markets. U.S. stock markets represent 30 to 40%, 35 to 40% of the total worldwide value, market capitalization. It's pretty amazing. The NYSE and the NASDAQ um, are the are uh, larger than the markets in any other country on an individual basis. The NYSE is like two times greater than the third largest financial markets in the world. I believe that is London, or uh, but I wouldn't swear to it. But anyway, and then the um, the Nasdaq is somewhere around 1.5 times that. So it's considerably larger. It's pretty incredible. Many times the demise of the U.S. Markets and New York has been predicted, and it it never seems to happen. Something occurs that seems to reinforce the so U.S. markets dominate stock markets in other countries. The um, U.S. financial institutions are more heavily regulated. Mentioned in previous lectures the reserve requirements that they face that with regard to banks. This creates an environment where banks have a very difficult time competitively lending to corporations in the United States. This is not the case. The in foreign countries, especially in Europe. It is very common for banks and corporations in Europe to have very close relationships. They they are uh, tend to have common board members and so forth. They, Historically, U.S. financial institutions face greater limitations on branching, services, relationships with non-financial business. So, legislation in the financial markets, this is when financial markets perform poorly, Congress tends to regulate financial markets, and when financial markets are performing efficiently, Congress tends to deregulate. So it's kind of a bouncing ball situation. So it's the unfortunately politics plays a role as opposed to the um, the best interest of the participants. But it still hasn't stopped the U.S. financial markets from uh, being the world leader.